because we have such divergent views of where we are, I thought if we could agree on what things mean, it might be helpful to us in trying to figure out where to go from here. So I titled this first page, "What Can We Agree On?" And the first one is, can we agree that all operating costs have to be from the unassigned revenues? We do not have a balanced budget if our operating costs plus the debt service is more than the unassigned revenue. So does everybody agree with that? We haven't done that in the past, and I know because we had everything combined, it was very difficult to tell what you were spending and out of what fund, and we had all the transfers in and the transfers out, and to me, it never made any sense. So this year, Tom has been reporting it to us in separated funds so that we could tell what's unassigned and what's coming out of the state street aid and all the other funds. So we're all agreed that this is the way it should work. The operating expense, which is salaries, utilities, telephones, gas for the vehicles,
What about things like street repair?
that comes out of state street aid.
Okay. So if it would come normally out of a fund, then
It's not in there.
not considered a operating cost.
Right.
Okay, then I can agree with that.
Can we agree that none of the other funds can have a negative balance? And I know we already have a fund with a negative balance, but, for example, if the board approved a $300,000 project that normally would come out of state street aid, but the state street aid only has $200,000, the other $100,000 has to come out of the unassigned revenue, and there has to actually be $100,000 in there to take. You couldn't spend it hoping you're going to get it. It has to already be there.
For the ones that are in a negative balance, that we're going to put forward the $360,000 each year, they just would not go, we would not take money from them, is that correct?
No, we're going to take the $360,000 from the unassigned.
That's correct, but $360,000 won't make the school facilities tax solvent.
Right.
So,
Yes,
what we're agreeing to is that if we apply all $360,000 to the school facilities tax,
yes,
and it's still $140,000 short, what we're saying is that we're not going to increase that $140,000. It will
Yes.
sit there until next fiscal year when we will apply the next portion of 360 to bring it current.
yes.
Okay.
And then we'll never use those funds again.
Unless it's for a
Unless it's,
project
right, for an assigned project.
I'm good with that. That's what I thought we agreed to.
So this is the one that has caused me the most grief, and probably I have argued the most to Commissioner Basile about. He's always told me that we just have to be at zero on June 30th. And I never could understand that. But my understanding of it now would be that the unassigned fund has to be at zero on June 30th. That we should not spend more money than we're bringing in. There will be ups and downs in that fund because of the way our revenue comes in. So we can be in a negative part of the year and in a plus part of the year, and on June 30th, we can be at zero.
Right.
But it's just the unassigned fund, not, we looked at it as if all of the funds totaled together, or we have been looking at it that way. If all of the funds had money in them, then we were up. If we had a positive balance at the end of the year with all of the funds, we were looking at it as if we were okay. I'm saying here that it should be the unassigned fund is the only one we're looking at.
Right. What I was trying to, that the audit standard is, yes, $250,000 in your unassigned funds. And you are, in street aid, just use that as an example. Maybe not, well, let's use school facilities tax. And you were minus $250,000 in school facilities tax. You are legally balanced because you can take the $250,000 out of the unassigned funds and place it into the school tax, and both are where they should be.
Well, what I'm saying here is, none of the other funds outside of unassigned should ever be in the negative. We can only spend whatever is in there.
That's correct. That's right.
And so the
That's what we're working
unassigned
toward.
is the one that can get to zero and it be okay.
Yes. We agree.
So we agree?
We're saying the same
Okay.
thing.
So we agreed on all three. We're starting out really good.
I just want to clarify though, when, like, if we are at a negative in the school facility tax at the end of the year, isn't that the same as being in a negative, even though we brought it to zero by pulling that fund?
It's not going to apply to this year. No, this
For the
will not,
future,
not apply to this year. Because I think the way the auditors handled it last year, I meant to bring that piece of paper and I didn't again. They left the school facilities tax fund positive, I think because you can't have a negative in one of those funds, and they put it in unassigned. Isn't that what they did?
Yes, the special revenue funds cannot have a negative balance. And as I reported, as you see, when unassigned has a negative balance, that means we're into one of the other funds paying for the unassigned expenditures. So it behooves us to get that unassigned above zero and up. And, that stabilization plan hopefully will get us, close to that 2 months operating expenses balance at some point.
So all of these things are our goals.
For this year,
Yep.
okay? Are we ready for Tom to,
Yeah, we'll cover the rest of the stuff later.
okay. I mean,
I just wanted to tell you I have spent a lot of time with these numbers, and I want to spend most of the time in the expenditure page. But I first want to publicly apologize to anyone that took offense to my comments last meeting regarding the park. I was out of. I should not have said that, and I wanted to apologize publicly for that. Just wanted to I put down some of my observations as you can read. When you come into a new job and you're not really sure where you are, and you're trying to figure out how to work payroll and how to do the daily functions of the day. It took me probably about 8 or 9 months to truly get a good grip of where I felt like we were. And then even at that time, I was not. I guess this is about the time I met Miss Donna. And I was figuring things out, going through my classes, and I'm still not an expert on a lot of things, but I feel like I have a way to find the answer. I met with Ralph Cross Friday and talked about it, and he reassured me that even though we're at that point where we need to do something, we can't go on status quo. There's nothing in our audit, there's nothing as far as our position that, the thing we really have to watch out for is going into the restricted fund balance. That is illegal, that is against the law. We can't go into state street aid money to pay bills, we can't go into drug fund money to pay bills, and we can't go into facility tax money to pay bills. But As far as the way the state looks at any of the other special revenue funds, they look at that just as general fund. Now, granted, if we've got a contract or we've got that's between us and the entity we're involved with. So that's the state has not, and as far as until I hear different, that's my stance on that. But going back to my observations on why I've come up with what I've come up with is I just feel like looking back at some of the history, it looks like from about 2009 was the last positive balance the city of Fairview has had as far as bringing in more revenue than we spent out. We spent over the years, we've gotten a lot of good things. The revenues have been spent on good causes. We've had, the fire hall, the road widening, the street lights, and upgrading the public safety, just on and on and on. But our revenues never went up. In fact, there was a decrease in 2011 of 6.5 cents of property tax, which didn't help us a lot. But anyway, as we've gone into the fund balance, and we've gotten to the point now where our fund balance is in the negative, and we really have to turn the corner and go the other direction and start bringing in more funds than we they can go out the door. And that's where in reality, I think the stabilization plan, if anything happened with the state, if anybody has any concerns about that, that's what the state recommends that we do. That's what we've done, and we have to show that we're, making every effort to follow that plan. I've only got 2 recommendations. This will produce $900,000. One is the restructuring of the debt. I see no cons, but it will give us cash flow of about $500,000 this year, the first year, and $250,000 for the remainder of the note. We also, that's 14 years or 13 years after the first year, and we do have we can buy it out after 10 years. This is just looking from there are other areas to raise revenue. There are not many areas to raise revenue that do not cost us money. So this is now granted, I didn't get elected, I got hired, but if we did a 23.5 cent property tax increase, this would provide $400,000 in revenue to be applied to the current negative fund balance. It also establishes a revenue source for the unassigned fund balance resources required by the stabilization plan. In addition, this hedges cash flow discrepancies that will occur when debt service payments resume in 2017. It also gives us some money to do some of these things like census, or if we want to look into an impact fee. Right now, there's just no funds to do anything with as far as those things. I'm going to go through, if you look at if you just take a quick gander at the revenues, at the end it's 5.3. If you look at the total expenditures, it's 5.8. If you look right there, that gives us a little over $360,000. The big thing I want to show that I've done differently is I've broken down, let's go to the expenditures page. I've broken down the expenditures in employee-related expenditures and operating expenditures. I have reduced the operating expenditures by almost 36%, down to $832,814. The salaries, I look at that as one of those investments that was made throughout the year through the years to get things like the 11th safest town in the state, drop a point in the ISO, the different things that everybody loves about fair, the amenities and the service. Without the folks, we can't do it. So that's where the primary cost to the city is. I do have the medical insurance in there. I believe that's the route we need to go. You know, we can negotiate, but I guess I wanted to get this out to you guys earlier before we had this meeting, but I have spent a lot of times wrestling with the numbers and going back and changing and scratching, and this is finally what I felt like I could give out. And I don't know if everybody wants to digest it. I've got, and we might could, if we want to meet, and I don't know, it's a lot to digest, but I can answer any questions. I feel like I've know most of the items like the back of my hand. And as you go through, and like I said, I want to focus on this unassigned expenditures because that is our number. Y'all wanted me to get between 4.2 and 4.3. I got down to 4.731. Like I said, that's about 10% off of last year. Granted, some of that is the cash flow, and then we're also down for the total general fund of 8.47. So it's.
Why did salaries go up so much?
The primary reason is, one of the big reasons is fire chief. If you look on page at the back, now these do have salary increases with at the anniversary date. So, but it's not a straight, like I said, some of these folks might get the same salary for 20 months and then get the upgraded salary, for 20 pay periods and then upgraded it for 6 pay periods like that. But it cut it by about $25,000. But on,
Is that what's the incentive pay?
on the incentive pay,
119?
yeah, that's the auxiliary police. Hold on. Yeah, that's the auxiliary police and the volunteer fire.
How are you gonna cut it?
I'm sorry?
How are you we're gonna spend 43,000 this year and you're going to 20,000. How are you going to do that?
We're hiring a float for the fire. That was another part of that expense, but it just takes them back up to the 15th. But what they've been doing this year is they've been running without that extra hired person, and for every volunteer they have to pay $125 a day.
125 a day.
They pay them $125 a day, and of course we're missing one full position because that's a lot of $125. So that has really bumped our incentive pay. So the two increases are the float position and the new
Chief's salary,
chief. Yeah,
which is, that is almost 100,000 just between those two positions.
all right.
So we replaced O'Neill in the police department. He became the fire chief.
Now there's a couple of positions. I've got the salary breakdown in the back. There's one open position with the police, and it is. It's a sergeant. So I don't believe they've replaced. I think they might have moved somebody in Travis's, but I think the midnight running on the corporal is kind of leading the way till they decide what they want to do in that area.
Mr. Hall, 2 people got promoted in the police department recently, or at least the positions were moved up. Can you explain like the thought process and that if we're like in a freeze?
It was promoted within staff, I believe.
Okay, but how much was there a pay difference? I mean, what kind of?
I think one of them was like $30-something hundred.
So
I
like,
don't even know who.
Do you know who took your place, Travis?
Joey Cox.
James Hill came in.
He's the one who came from the SRO
in Mr.
position?
Cox's spot,
Yep.
and Mr. Cox moved up to sergeant.
Travis, why do we still have a sergeant open?
I'm not sure why we left those.
That's Pat Stockdale's position.
Okay, well,
Night
he's
shift
got a
sergeant.
lieutenant up top.
Right.
He was promoted
He-
to lieutenant then.
He was promoted to lieutenant because Roy is leaving.
Okay.
Roy's going to the park.
yeah, but wasn't there another promotion also?
That was Joey Cox, from
Joey
corporal
Cox.
to the sergeant.
Did Shane, what's Shane doing?
Shane kind of made a lateral move. He went from canine drug detective to a lieutenant, and his salary basically stayed just exactly the same.
So like going forth this year, do you intend to fill any open spots? How many open spots and as far as the structure do we have? Is there any positions that are not budgeted in here that we can expect to be filled?
None to my knowledge at this point.
There's one with the police, and of course, he would like to, but there's one, and then I have not told Travis about this, but he would, but there's one for the fire, that float. But other than that, I'm not aware of any.
So the grant positions, the 2 people we just lost?
Well,
from
the
fire
grant,
department?
yes, the grant needs to be filled.
So there's only one grant position opened? Is
Hold
that
on.
gonna be the float, or?
Now, there's a grant position open and a float position open. And Travis, that would get us back to where we were. And then Travis was hoping for another float position, but I didn't, it wasn't in the numbers.
And then one position in the police, and what was the police?
That sergeant position. And so the sergeant and then 2 fire.
So you're budgeting for $400,000 more this next year than we got in this year?
Explain that, Miss Donna.
On the totals page for revenue, you're projecting that we're gonna have $4,483,000 and proposing $4,850,000. Is that from the property tax increase?
Yes.
What happens if we don't do a property tax increase?
You can subtract 400,000 from that number. Be 4,450, 247.
What are we gonna do to make it to January? If we, you mentioned something earlier about we were gonna hold off on replacing or doing something, I can't remember right exactly what you just were referring to, but what do we do, like, if what's our cash flow right now from,
I'll look at the expenditures. The main expenditures we've been having issues with are the debt payments, which will be relieved of those this first year. So we're in a revenue stream where we're maintaining until we hit those lump sum debt payments, or if we wanted to put anything back in reserves, it's not there. But we have been able to maintain our bills. But, if it gets to, I would like to do a cash flow analysis, and if we need to, we could do a TAN. All we gotta do is pay that back within the fiscal year and move right on. We could borrow up to 60% of our, property tax, if we needed to. But right now, I couldn't recommend that. I mean, I think that's down the road. After July, look at it right around in June and July.
and so we would take it, borrow it, and then pay it interest when we get it back in, or how's that?
Yes, you might have a month or two of interest if we did go that route.
On your expenses, we originally projected that we were going to spend 4.7 million, and you got 5.1 million. What is that? Oh, you got the debt service in it.
Yes. That makes a difference.
Yes, it does. Well, I guess the thing that we have to decide, and if y'all will look at page 2 of what I handed out to you, it's just a reiteration of how we came up with the amount of money that we were gonna spend, the 4.2 million. And whether we're gonna do that, or we're gonna go back to saying we're just gonna spend just like we did this year, plus some, and make up for it with a property tax.
Madam Mayor,
Yeah,
are you serving as the chairperson?
yeah.
Everybody, I'd like to have about 15 minutes recess to kind of look through here. I can't listen to everybody else and try to formulate my questions and look at this document at the same time. So
Okay.
I would ask that we consider having a 15-minute recess and then reconvene and talk.
Okay.
Then ask our questions then.
15-minute recess.
So I make a motion. Second.
Okay, all in favor? Opposed? So it is
Which figures?
5:30, I guess at
Yours?
5:45,
Or they-
we will
I just need to know, 'cause I
end
don't care. Like,
discussions
we can make it
again.
work.
I mean,
Have you seen these compared to yours?
mm-mm.
Maybe you and Donna need to get together.
I will go ahead and move forward. I reopened the meeting. 5:37.
Okay, the question has been asked where I came up with my numbers. About a month ago or 2 months ago, Tom and I did projections. I sent mine out, then he sent his out and did a comparison of them. The numbers on my second sheet, which we could show this to the audience if put it on the slide up there. Want to.
That's fine with me, if y'all have room for,
Is unassigned revenue only.
They're gonna have to get a dot over here.
Is it this one? Okay. You can put yours on? Yeah.
Let's see who's really bald. They're getting a light spot right there, though. Golly.
My barber took a little too much off.
I think, well, I cut too short.
It's not going to be big enough to show, is it?
You can get right down to the numbers. Come on, come on, come on. There you go.
So, in unassigned revenue only, we originally were projecting 4,639,958. If I'm looking at this right, Tom is now projecting 4,483,481. I'm not sure where that would be.
Yes, ma'am. I believe the discrepancy is going to be in the, some of the accounting areas we need to address, i.e. the employee contributions being shown as revenue. That's now being shown as a net back into the,
Okay.
that's close to 200,000 of it. There may be one other net item.
Yes, that is still in my number, so that's the difference. And expenses of 4,714,715, and I think that's probably close now on his projections.
4811.
He's got 5,171,000, but his includes the 500,000 for the debt service. So, he spent 74,757 more than he took in, plus we also had to have the debt service out of it, which is 522,000. So overall, we spent $597,000 more than we took in this year. So if you take the revenue that we bought in, you subtract $360,000 from it for the reserves, that's where we came up with the 4.279,958 for him to spend next year. And he is saying, and let me just comment that they reduced expenses $219,000 this year. So they did an outstanding job of cutting down. At some point, though, we can have employees and nothing to do because they have no resources, because we cut everything out of the budget for them to work with. Or we're going to have to face up to the fact that we've got to cut employees so that the rest of them have something to do. If you take what he spent this year, 4.7 million, and subtract it from the 4.2 million that we gave him to use, he's got to cut $434,000 out of what he spent this year to accomplish that. If you look at the next page, page 3,
Hold on, Don, I've got a question on that. Wouldn't that be 434,000 out of the 4,731? That,
yes,
okay,
yes.
thank you.
Give you another heart attack, huh?
Where's the 4,731, just so I know what we're looking at?
It's the total unassigned expenditures on,
Okay, I'm there.
okay. That's where I was shooting for 4.2, right there.
Page 3, Ms. Don.
Page 3, just to give you a for instance, I am projecting, with Tom's original projections, that we're going to, our negative balance at June 30th is going to be 475,000. And to be fair, Commissioner Pacell is projecting 206,000, if I read your numbers right.
I don't remember.
Okay.
I really-
So anyway, I put both of them in. I put in the revenue of 4.2 million plus the 360,000 that would be left for the reserves. The expense at 4.2 million, the debt service of 24,000. So even after he cuts all this, we would still be in the hole June 30th of next year on my projections. On Commissioner Pacell's, if I read his numbers right, we would wind up in the positive next year. So it all depends on what our negative balance is at the end of this year.
Right, I agree with that.
So I just wanted to show you how it's going to roll. If we decide that we're just going to truck on down the road, I mean, we can do that. I have some suggestions that nobody wants to hear, if we want to talk about actually adhering to the 4.3 million, but 2 million.
Randy, where's the flip chart that was used to be in the conference room? Because people don't like it when I start spouting numbers in the air.
Thank you very much.
Well, would you like to give your suggestions while we wait for the flip chart?
Okay. We have all avoided this time,
4.811.
and
Right there.
I wished it hadn't come to this. It is not anything about any job that anybody's done. It's about whether we're willing to pay for the services and the employees that we have. We just can't keep cutting all of the resources. So my suggestion is We eliminate the assistant police chief and one detective. We ask the city manager and the codes director to take a pay cut, and that would give us $147,000. We do the insurance package, which adds another $28,000 to the deal. We have mandatory no overtime. Supervisors have to fill in we'll pick on the police department. Supervisors would have to fill in,
It's in this.
no. Would everybody like a copy? We can get it. But you gonna make, I think 8, 9.
We better hold off for a second then, because we don't have.
We don't have anybody recording.
I would do it, but you wouldn't be able to read my writing.
Tom, have you heard yet?
Okay, we'll go ahead, Ms. Brooks,
Just
if you
right
want
there
to
is fine.
finish, and we'll pass this out.
Turn around and see what I
If y'all can, if y'all want to talk, you're going to have to talk to everybody else. I mean, because we can't. Did you already get one?
No, I didn't get one. Thank you.
Supervisors have to check with all their employees midweek to see how their hours are running. Send them home early, let them arrive late, whatever it takes to get them to 40 hours. If there's a call comes in at 2:45 and they get off at 3, they can't take the call if they're getting close to overtime. And I would say unless the chief is going to have to go out and cover a patrol, that nobody could approve overtime. There are places that make this happen. I don't know how we do the court dates, but for instance, if we gave out tickets and the court date is the first Friday of the month or whatever, do all of the officers go on that date, or do they wait and see if they need to go for a trial? The person who gets the ticket has the opportunity to say, I'll pay the ticket, or I want a trial, don't they? Is that the way it works?
Yeah, but the officers here, they're just each assigned one court date a month. So
Okay.
half of them will come the first court date of the month, half of them will come the second court date of the month. And you gotta remember, they don't only have speeding tickets, they also have criminal cases.
And the other thing to look at is if we should just give up the general session portion of that and do some kind of cost analysis to see if it would cost us more to keep it or send it back to the county.
I did ask on that, and Tom gave me some figures of, we're actually, not much, but it covers its own cost, and we
Okay.
make a little bit. Now, years past, we've made substantial more than we do right now. And, you know, we've discussed this before, whether it's tickets or, you know, the stoplights slowing things down, or, you know, or let's say that everybody's just behaving and not, you know, having to get arrested or pulled over. But as of right now, I mean, I actually thought about it, but, I mean, there's no need if we actually made a little, you know,
As long as it's
Covered
covering
itself.
its cost, it's worth it to the citizens not to have to go to Franklin.
I
And
agree.
there's another thing too, on the general sessions part of it, if you have somebody arrested here and you go to general sessions in Franklin, you're gonna tie up a substantial number of your police
Right.
officers for a longer time, because when the court's over down there, they're gonna have to come back here before they go back on duty.
Right.
And if the guy's down there and you don't have the police officer there, then they're gonna move for something, and if it's a rather minor thing, they may just walk.
If we're looking for cost effectiveness as to the court, we need to do it by video and have the defendant show up by video. He stays in the jail in Williamson County and is present in the courtroom by video.
Can we do
His
that?
attorney can be there.
That's-
Can we not do that?
Not for a plea. You can arraign somebody by video. Bond docket by video, but you can't do a plea by video.
You can't do it?
Confrontation clause.
Okay.
Are the seizures by the canine dog paying for the dog upkeep and assigned officer? I don't know the answer to that question. Is it worth, are they paying for themselves?
Yes, ma'am.
Yes, this year, well,
I would suggest no salary increases, no promotion increases, everything is frozen, and those open positions will go unfilled. I do not see a way that we can keep the 3 firemen after the grant expires. Did you exclude the revenue for those 3, for the grant, starting in February?
no, it's gonna go through, yes, I did exclude it for February. We just did 6 months.
Okay. We could pay the street maintenance people out of the state street aid another year. Not that we did it this year. I think we've determined we're not gonna do that, hadn't we?
That's, I
Yeah.
think he's figured out a way to do it, not do it this year.
Can part of the duties in the park be handled by a volunteer group or not done at all? Can we maintain a smaller area? It's just a question, I don't know. Start having entry fees for the park of $50 a family. 2,500 families times $50 is $125,000. Have the horse riders and the mountain bike riders, because they tear up the trails more, pay $100 a year, and all outside the 37062 zip code be $100 a year, but school groups still get in free. And to just give you a little story of how I hate even suggesting such a thing, I was in Warner Park one time, and I was on one of the wooded trails, which is usually pretty solitary, and some group coming up behind me was just making all kinds of noise, and I was getting more and more agitated, because you don't go on those wooded trails unless you want solitude. And I stopped and let them catch up with me, and the teacher apologized because they were making so much noise, but they had never been to a park before. And it broke my heart that I was mad at them. You know, I would just hate that somebody could not go to the park because they couldn't afford the $50. But there would be an expense associated with that setup. I have no idea what it would be, but I put in $25,000. We could start charging for chipper service, maintain a once-a-year service for picking up leaves in the fall, but people would have to call and get a bill sent to them if they had a chipper service for their limbs. Give employees a phone allowance of a set amount instead of providing a phone. And I would contend that that should only be to absolutely necessary people. They cannot take their patrol cars home if they live outside the 37062 zip code. If we go over the gas budget next year, we may have to start having 2 patrolmen ride together. Somehow, we have to get control of the expenses. We have to have the debt consolidation restructure completed by November, or we start making payments, which is not in the budget at all. So all of this adds up to $368,000. And I want to give the example of my own property, our own property tax. We pay $1,135, but only $249 of it goes to the city of Fairview. I have one grandson in school out here, and I'm sure grandmas and grandpas in other cities are paying for my other grandkids. But that's all I get from the county. And from the city of Fairview, I get the fire, the police, the parks, and the streets. So we have no problem paying more in property taxes. And I think $400,000 is probably a good number. But we have to, go ahead.
Just say this while we're here, I just based it on my personal property tax. It would, if we went to the number I proposed, 87 cents, it would increase mine to $113 over what I paid this last year.
I don't see how, and maybe Tom can explain how it is. I think I put that in there too. We are going to get by without asking for an advance on the property tax. I do not see how the money's going to be there to get us through. It's page 5.
I have a question, not about property taxes. I know we're anticipating that we're gonna do this debt restructure, and I guess that's gonna happen, but have any idea when that'll happen? How long the process will be?
A lot of it will happen Thursday night.
Okay.
It's
So,
come.
will it be done before we do this year's budget?
One of my requirements with Cumberland Securities was that we have approval by the state, and that is and we have a resolution, everything before June 30th that we need to make it official.
Because if we don't have it by then, we will have to include in the budget what we would expect to pay under the current debt situation.
It makes it a lot cleaner to have it done out here.
Yeah, I think we have to.
Yeah.
Because I don't think we could report in our budget to the comptroller that the budget is going to be X with respect to debt service, and when, as it stands on June 30th, it would actually be something different,
Right.
because we wouldn't have the restructure done. So, but you think it will be done by June 30?
Well, it'll be, all the official documents are done. It'll take some time. It's not, but all the official.
Be approved at least?
Yes,
Okay.
yes.
Do we have our bond rating yet?
That's some of the things we'll be touching on Thursday.
Okay.
Well, one of my concerns is we do this budget and the debt's not in the budget, so we're counting on doing the restructuring. But my concern is we are, obviously, some of it's going to go to help rebuild the reserve. But we're still not really setting ourselves up to be better the second year because that note comes forward. So we still have to keep 360 in reserves. So, with the property tax, it's still not adding up to me that it's going to be right. Because even when next year comes, we have the payments due for the debt now. And let's say we had the amount in reserves, I don't see, with us still spending, I know you made cuts, but still spending so much this year for our budget, that we're going to be any better 2 years from now.
Well,
Besides, if we get rooftops or additional businesses, but we can't ever do a budget on projections or hopes again.
If the budget numbers that Tom has prepared all work out, and come to fruition, it looks like we'll be about $400,000 to the good in terms of next year's budget, is that right? So that, and depending on what the negative number is at the end of this year, that may or may not even cover the negative fund balance that exists at the beginning of next fiscal year, right? So we could still be in a negative position even with a 22.5 cent, is that what you proposed?
23 and a half.
23.5, even with a 23.5 cent
Yeah,
property
that's
tax
what I'm
increase, we
saying.
still could be at a negative position depending on whose negative number is
Correct.
right,
Yeah.
450 or 200,000. So if I'm looking at the budget, it looks like we're increasing property taxes by about 35%, and we've decreased expenditures to about 8.5%. And that's just in the general fund, I think, if I'm looking at the numbers right.
Right.
And I've already said that I'm not gonna vote for a property tax increase that is that much higher than what we're cutting in terms of expenditures. I mean, we're gonna have to attack it from both sides. I've already said that I won't vote for that. So, you know, which is why we came up with, I think, when we sat here around this table last time and came up with the $4.2 million number, I think that was the purpose in coming up with the $4.2 million number. And now we're about $600,000 above and beyond the $4.2 million number that we gave you to do a budget with. So I guess the point is this: if we don't attack this from both ways, both directions, we're still in a negative. We still have a negative fund balance at the end of the fiscal year, beginning of next fiscal year. We still don't have $360,000 in a reserve fund. That money that would have gone into reserve fund this year is now being used to chip away at some of that negative fund balance from the school's facilities tax. It just doesn't appear under this budget that we're in any better, well, I'm not gonna say we're not in any better position. We're closer to zero, but we're still not there in the unassigned general fund, and may still be negative.
We will still be negative.
Well, it
There's
depends
no
on,
way
depends
to,
on whose number down here is right.
Do you know what our negative number is at the end of April?
I do not.
But he does March.
March, it was
206.
209, 977.
And that's if everything goes perfectly, and we know that everything's not gonna go perfectly. I mean, there's gonna be something come up during the course of the fiscal year.
We know we have 2 debt payments that are coming up here this month, and plus we've got an extra payroll in this month. So
You
those
know
are,
what the balance in the bank is right now?
It's a 3-year plan. It's gonna take a 3-year plan.
I hadn't looked at it in 4 or 5 days, but
Yeah, but we.
I think we're right around 400,000, 450
I think.
In all funds, or just the
in
general?
our checking account.
Just checking.
Yeah.
But how much of that's left in State Street aid after we transfer? I know we transferred some.
I'd have to get all those numbers together. I don't have them with me.
The other suggestion that I have put on here is if you want to keep all positions, you take a 10% salary reduction across the board, beginning at $35,000. So if somebody made $37,000, they would only drop to $35,000, but everybody else would be a 10%. Going back to a volunteer fire department, or have a committee of local people, local business people, civic organizations, service technicians to study every position in the city and see what we need. This leaves no money for grants or projects or anything else. If we take $100,000 out of the State Street aid, we got $100,000 left to fill potholes. So my personal opinion is we cut some degree of something, probably people, and do the property tax increase. And when we get to fully funded reserves, we continue the property tax increase so that we have money for capital projects, because we know they're coming.
Okay, if you don't mind, right now, we'll go ahead and let Commissioner Bissell, and then we'll circle back around, and, because you might offer something that, you know,
I'm just gonna sit right here on
You're
my
just saying if you had the easel up there.
Would it be better to put it up there, y'all think? Would that be better? Would y'all be able to see it? I was thinking it's closer down here. but-
Donna, you mind?
I could just
Stay.
sit right here.
Okay.
Oh, she could just sit over here. So, okay, just a couple of things to kind of frame what I'm gonna do up here. As I put a number up here, if someone at the table, or now Don over here in the pew, if I misstated something or misunderstood something, then please, let's stop and reconcile that number, okay? All right, but there are some presumptions I made, and I have a list, but I've written all over it like I did last time, and so I can't really make copies and give to everybody. So that's why I'm asked for the flip chart up here. But I thought we agreed that we would start with what we actually brought in this year. And when I read Tom's data, that is, and I'm going to use some round numbers because it makes my math and all easier, okay? But they're not big rounding, they're just little rounding numbers. We are anticipating $4,485,000 revenue. Okay? That is what it says on their projected general revenue, without any funds, without anything. All right? We have said we're going to take the first $360,000 out of that to fund our replenish tax that we put on ourselves. So that gives us $41,250,000. Does everybody agree with my fuzzy math so far? Okay. Now, according to Tom's figures, we should get $210,000 in street aid. Everybody agree with that? Tom, is that correct?
Yes.
Street aid can be spent on enough of our categories that it should be included in our budgeting revenue. And I believe that's what Donna just said.
We would only be able to count the salaries for the state street aid because we already have the expenses moved to the state street aid to start with.
Okay, I'm going to get to that.
Okay.
Okay? But for right now, as terms of revenue, it's a complete, you can either include it at this point or not. I chose to include it because just assume we're going to find something to charge all $210,000 to. That's legal. So we have 4,335 million to run the city on. Okay? Now, I'm going to start with my next premise, which is that we do refinance, debt restructure or whatever. And so our debt payment is $50,000 or something. Is that about right, Tom?
I'm showing half of that, but
I think it's 24,000.
Okay, so it's going to cost us $25,000, okay, to debt restructure. So now we're at $4,310, and we haven't laid anybody off, and we haven't raised any taxes yet. We've covered our debt and covered our replenish tax. Okay? Is everybody with me? because I'm now out of flip chart. So I've got to wipe this off and start over again here. So are we agreed at this point? Donna? Okay. $43,10, was that my number? Okay. All right. According to the sheet Tom has given us, he has expected $833,000 worth of operating expenses. Is that right, Tom?
Yes.
Somebody with a calculator, make sure my math is correct. That leaves us 3487. Okay? And Tom has estimated that his cost of the employees, if we fill the 3 jobs that are vacant, if we give the 2% raise but move it to their anniversary date, and if we buy the full pay insurance, which are really the only 3 variables in our current payroll that we're dealing with, that's going to cost us $3,900. Is everybody with me? So we are looking to balance with what we've already been given by Tom. Because this will put us at a negative. We are needing $413,000. Is everybody with me so far? Everybody agree with my numbers so far? Okay.
You do have to take out the $71,500 for state street aid that he's got in there in expenses. If you added all of the revenue in, you got to take the expenses out.
No, it's an expense. We haven't done any street aid expense yet, other than what he's already put in there to offset the revenue. There's actually another $132,000 that expenses can be charged against that he hasn't accounted for
I know,
yet.
but you added the revenue in, you didn't take the expenses out.
Okay, I understand. If you just let me finish, I think you'll see. Okay? All right, because I'm just going by what his numbers were. Okay, these are not my numbers. They're just what my understanding of what he's presented. So I lost my train of thought. What was that number? 413,000?
It should be 423.
423. That's what we're looking to fund. Okay? Additional 423,000. All right? Now, in what Donna is talking about, I'm assuming that we will go through the budget and we will find those items that are already in that $833,000 that can be charged to street aid to use up the entire time.
No, they're already separated. They're a separate thing.
Okay, well, all right, then we'll add the 70, how much is it?
71.5.
71.5, back to it. That make you happy, Donna? Okay, you're wrong, but that, for the sake of argument, we'll move right on in. So, $494,000, 500. Okay? That's what we're seeking, $500,000. Everybody okay with that? All right. Where do we find $500,000? And these are looking at Tom's numbers. We don't fill the policeman's job. Okay? And we don't fill one of the firemen. We fill the one with the grant, but we don't fill the other. That's $100,000.
Are those already in the budget, Tom?
Yes. According to his sheet, they're already in the budget.
Okay.
But I thought the other one was a float that was gonna help us decrease the incentive pay.
It's still in there,
But it's in the
deposit
budget.
30-something
It's in the
thousand
budget
dollars.
to be hired. So we don't hire them. We don't hire the float guy, and we don't hire the policeman, and with benefits, that's $100,000. Okay? Now we need $400,000. Right? Still haven't raised taxes, still haven't fired anybody. Okay? Looking at the numbers that we plan to spend, we have increased gasoline over what we spent this year significantly. I believe that we can cut probably $10,000 out of the gasoline. Somebody look at the numbers and tell me if I'm missing something.
How, will you give explanation on how, because gas prices are starting to go up, what's your suggestion on how we're gonna cut?
That's an operating decision that the city manager and the other division chiefs will have to make. If we don't have it, they don't have it. Rise, based on what we have right now, that's not having, there is some increase built in, even if you take $10,000 back.
But that's
We
you
will
to,
all remember that this is what we know as of today. And what we have done is we have said we're not going to count on anything. So, all I can tell you is based upon the number that Tom has put in there, I believe you could lower it by $10,000.
but that's just that's you looking at a crystal ball, just arbitrarily saying, I think we can lower it by $10,000. I mean, you have nothing to substantiate that. It could be more than what Tom has in here, depending on what happens.
Yes, you could. And we could lose 17 employees too.
Well, I
We
understand.
have a natural attrition rate every year that's not built in there. We lose employees every year, Shannon. And that's not, there's no attrition rate in there at all, in the salaries. It's assuming that everybody that's working today, plus 3 people, will be working at the end of the year. And that's not gonna happen. Somebody will leave. I don't think so, but that's just me. The operations person thinks that he's got enough money in his budget, and that's what he is. But I think that you could take $10,000 off the top for that. I think you could take $25,000 out of the overtime. Donna thinks you could take it all. I don't necessarily disagree with her, that you start out the year with no money in overtime. If you did that, that would add $85,000 to it, but for the sake of what I'm coming up with, let's just say you take an additional $25,000 out of overtime. We have scheduled for them to, let's see, 310 and 320. I've never understood the distinction between operating supplies and office supplies, so I add them together. I think it's pretty reasonable to say you could take $5,000 from that. $3,500 apiece. Repair and maintenance of the motor vehicles. We're adding to repair and maintenance when in reality, we should be subtracting from what we spent this year for repair and maintenance. I think there's $10,000 there. And what do I base that on, Shannon? I base that on the fact that I went down and went through the actual receipts this week. And in doing all of that, I see that we have spent $1,500 on the 12 new police cars for maintenance for an entire year. What we are spending our maintenance money on is trying to keep the old equipment running. My operational suggestion to Mr. Hall is that if an old piece of equipment dies, an old truck dies, then it's junked. We don't continue to put $3,000 transmissions in vehicles that are 15 years old. Figure out another way to handle that. But that's an operational decision. For us, the facts are we could easily cut another $10,000 out of that because our performance, based upon what we know with the new police cars, has pretty much eliminated the police department from that maintenance.
What is this out of motor vehicles?
It's 261.
And then there are other things that you just basically can go line by line by line and shave 10%. And once given those things, what you come up with is approximately, and to my way of thinking, about half of this 400,000. So you take these things out, which are the big ticket items, which is $30,000, $40,000, $50,000, and now you're down to 350, okay? And then you look at all the other little items. In other words, talk about tuition.
Let me stop you there. I thought that's exactly what we weren't going to do this budget year, was go line by line by line, and we was gonna put faith in the CFO to come to us with these numbers, which is what he's done. Do you agree with these numbers? I mean, you did this budget. Do you agree that we can cut in these places that Commissioner Basile says we can cut?
I'm not telling him where to cut the
No,
rest of it.
but you're suggesting those are places we can cut, so I wanna
Right.
know from him if that's somewhere we can cut. He came to us with these numbers, so he put these together based on his belief that this is what we would have to spend next year. Do you agree that we can cut these?
I base my numbers on past experience, this past year and looking back at the year before. What's coming up, I mean, it's a plan. We're making our best guess at what's gonna happen, and like I said, if we're,
You feel more comfortable with your guess or Commissioner Basile's guess?
Only let me finish. And
Well, you
then
said stop you whenever we,
if you had a problem.
Well, I have
with
a
the
problem with every
validity
one of those.
Of the validity, Shannon, with the validity of the number I was putting up here as it related. We're not to opinions yet, but you do me the courtesy of letting me get into my bottom line, and then you can discuss opinions. That be okay?
yeah, but just, I wanna keep those, that 10, 25, 5, and 10, I want us to keep those numbers
Okay.
in mind and what line items they are.
Okay. All right, so from where I sit, we're at $350,000. My assumption is that, and I don't care where Tom puts it, that we're still at a macro level where I come from, and Tom says of that 833,000, he's got to find 150,000 more dollars after these things come out. So, once that happens, then we are down to $200,000 is what we need. Now, there are other things, I have other suggestions, but since you seem to think that's a conflict, then I won't throw those out there. Except for the ones that we can make $20,000 simply by us taking a pay cut.
No problem.
Okay? So.
I say across the board, and while we're throwing that out on the line, if we're gonna take a pay cut, then the employees, we all can take
No.
10%, and then,
The
you know.
employees don't get a vote in this, so therefore.
Well, I'm just saying, I mean, if you're gonna throw that kind of stuff, we need to be clear. If you wanna do pay cuts, we can all take pay cuts. But the thing about it is, you don't want to, and that's why you're giving us, you know, some options
I don't
to
want,
look
I
at.
don't mind taking a personal pay cut.
But we're gonna do it for everybody across the board. If that's, you know, that's how I
Okay,
would
well,
feel.
that would be your
Yeah,
vote.
my vote,
Okay, I
yeah.
won't vote for that, but that'll
Well,
be your vote.
I know you won't.
Okay, so we have $200,000 we have to make up here. That's a 12-cent increase to 75 cents, not the 80-something, that's 75 cents. Okay, now, if you go back to the last time that we had an increase in property tax, and we can make copies of this, or we can throw it up if there's a way to put it up there. We've had no increase in property taxes since 2004. In fact, in 2011, we reduced them to 635. Since 2008, inflation has averaged 2% a year. The inflationary impact on our current dollar is $181,000. If we give a 12-cent raise to an even 75 cents, that brings in approximately $200,000. So, you know, you could lower it to 11 cents and it would be right on the money. But 12 cents puts it at 75, and that's just a nice round even number. Okay? It brings us even for inflation. It doesn't add to what's going on in terms of us assessing ourselves the replenish tax, and it doesn't factor in the growth. It basically just puts our revenue at what our revenue should have been had we been monitoring inflation. It's not an increase for the growth, it's not an increase for anything. To give you some additional information on that, I hear a lot of people talk about our tax rate in Williamson County. Well, as most people know, tax rate is a subject of two products. It is not a subject of one. It's not just, the amount of tax you pay. We have to take the assessed value times our rate. Yes, we are higher than most in Williamson County. However, we do not break it out and have a fire tax. We do not have Franklin Special School District tax. We pay all of our school district through the county. On a state of Tennessee basis, we are in the lower third. The average in the state of Tennessee is $1.08. The median is $1.02. And that's after you remove any special taxes like fire and school taxes. So in terms of what our people pay and what we control, it is very, very low. If we raise this to 75 cents, we only lose 8 places in line. So we're still in the lower third in the state. So everybody gets their raise that we've promised them based on the merit system. They get it on their anniversary date, which is how it was designed in the first place. Nobody gets laid off. We don't fill 2 vacancies. And we direct our attention of our CFO to taking this money and figuring out a way to take $833,000 to $633,000. And we have a budget.
And we're still going into next year, even after next fiscal year, with a negative number in the unassigned reserve based on those numbers. Not unassigned reserve, the unassigned general fund, we still have a negative number. Because we would not have covered what we have taken from the school's facilities tax,
You will have a negative in school facilities tax, yes.
still.
But you will have applied $360,000
Toward it.
wherever Tom chooses to apply it or wherever the board directs him to apply it. You will have closed the gap by $360,000, which is the legislation that's on the books. 360, 360, 360. It meets. Now, your previous statement that if you do all of this, the amount of decrease in expenditures overall, according to my calculations, is somewhere around 11%. You're asking for a 12-cent tax raise. From what it was before we lowered it 6.5%, which is something the taxpayers have been getting for the last 4 years. Before we lowered it, you would have been asking for 70 to 75 cents, which I believe is less than 11%, which is what your need was. Your stated need was that we needed to start with last year's known revenue. And that's what this does.
But now back.
My need is that we don't balance what could be perceived. And if we're looking for somebody to blame, blame me. Blame me. You know, that makes everybody happy. Blame somebody, blame me. Okay? But if you're looking not to blame the employees, because the employees have already done a yeoman's job of making up $200,000 of this. If you're not wanting to do it on the back of the employees, then this idea that we should let people go or that we should do anything. Donna is absolutely right. No more projects. Dr. Rice comes in here, he needs $7,000 for History Village. Dr. Rice, we don't have it. something comes in that's an emergency, we have to look at that and we have to say, where can we cut to pay for that if it's something that has to come out of general obligation? But if it can come out of one of these specialized funds, that's where we ought to charge it. That's why the money's in the funds. So I don't see us needing to talk about letting people go. I think I just don't see it. Now, you know, it won't be the first time I've been referred to as a dreamer, an idiot, not in touch with the reality. But I just walked you through this, which is what we told him to do when we told him to bring in a budget at $4.2 million, and he didn't do it. Now, Tom gave you the numbers to the best of his ability. And what he's done is he's given us his best advice, and I'm not faulting him for that. He did exactly what he's told you he was going to do, and he's given you the best numbers. Now, as many people have stated, the monkey is on our back to balance it. We have two choices. We can do this money here. We can determine where the extra $200,000 has to come from, or whether it's really $400,000. How much of it we want to be property tax increase, or do we want to cut it $400,000 and take it all out of expenses? We have to determine that. He can't do that. He's given us the best numbers.
He can't, you can't run the city on $432,000.
I don't think so either.
You can't run, I don't think you can run the city on $632,000, or Tom would have come in here with a total unassigned operating expenditure of $632,000,
I
and he
think
didn't.
I think you can.
Well, that's where I was going a while ago. Is there $200,000 more dollars in total unassigned operating expenditures that you can cut? And if there was, then why is it not already done, I guess is my question.
To probably go into some of these line items, the department heads are more qualified. I have had multiple meetings with them, and it's, what we try to do to get it down is, I guess, I just want to go through here, just to let you kind of know what $828,000 does. For general government, which that's $305,123. For city court, $5,750. For finance, $15,000. For codes, $21,000. For police, $99,000. Now this is for 12 months.
That's what's
of operating.
These numbers are what makes up that $800,000?
Yes.
Okay.
For fleet, $181,000. And for fire, $97,000. And for highways and streets, $13,000. And of course, we don't have to go into state street aid. Parks, got them down to $39,000. But there are some areas that, what runs into, especially with the fire, is they've got certain amount of equipment that they got to buy. They've got certain amount of training they got to do, and they've been pushing back and pushing back and pushing back for the last several years. And I guess Donna had a point, is will we have any resources to do jobs with? And granted, we can put a number in. I think, some of it may be able to work out. I'd like to get each. I wouldn't like to sit here and speak for each department head. I'd like to talk to the chief of police and have him say yes, 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 and the chief of the fire chief, and go down. And I feel like parks and streets, I don't think we can beat. I can do something. But anyway, I just wanted to say one thing, and I say this in all the respect in the world, Commissioner Crutcher. But one thing that's been bugging me about this whole thing is that, you know, the employees, you know, during the whole time, us getting into this shape, it never was one ended. The revenue was never addressed, ever, during this whole time of getting here. And the one time I'm asking people to address revenue, you know, everything we've got in place was an investment into our infrastructure for us to be able to provide service. You know, if we don't want to provide the service, let's just don't. But, you know, we've made this investment. You know, we went all the way up through here. We've gone through our 2.5 million in reserves. You know, we've got to do something. And I think, I don't want to whittle it down to such a point where we have nothing to work with. But at the same time, I know you've made your statement, but I just want to make mine that in getting in this situation, there was no revenue touched. In fact, it was lowered. So that's just my only point.
Well, I think we did spend money to build up the infrastructure and the things that you're discussing, but I think we did it ahead of schedule or expecting there to be that increase in revenue. I don't think we ever did that thinking that the revenue wasn't going to come along with it. Surely we didn't do it and cut taxes at the same time, which it sounds like what happened. And at one point in 2011, we cut taxes. So, I mean, surely somebody thought, well, we're going to have some significant growth to be able to substantiate the money that we have, or to offset this money that we have spent. And that growth just hasn't happened fast enough. And I understand that it's not Shannon Crutcher that has come up with this idea, hey, let's only raise property taxes by what we cut in spending. I'm listening to the constituents. I'm listening to the citizens, and I think there's a mistrust of the use that or how we've used their money in the past. And I think just bringing in money without also counteracting or counterbalancing that with a cut in expenditures is just going to further that problem.
Yes, let me say something as far as the tax decrease. During that stretch, from 2007 to 2013, we had 64 building permits for rooftops. In the last 16 months, we've had 67. Just in 16 months, we've went past the figure that went on from those several years. So during the economy, when everything was down, the revenue source decreased for property tax, but the revenue up here stayed the same. Basically, you was looking at 7, 8, 10 building permits a year. In 16 months, we've gotten 67. So that should tell you what happened as far as the downturn in the economy.
I agree with you. The revenue went down, but the spending kept going up.
Exactly.
And that's my issue.
Yeah.
I mean, that's why I'm saying we're going to have to balance those two to be able to dig ourselves out of this problem that we're in. And I'm not blaming anybody. It's just the reality. I mean, I don't want to see an employee lose their job. I want to see that. That ain't going to make me rest easy at night knowing somebody's got to make that tough decision. But at the same time, we're going to have to find places, and Commissioner Basile thinks we can do it with another $200,000 out of the total operating expenditures. And if we can, great. But that's what I'm trying to get to with you. Can we do that? And if we can do that, at what point is Ms. Brooks right? Do we just not have the resources for our employees to go out and do their jobs?
I have what I need. I can talk. I can't bless this without the department heads blessing it. And because we went through it, and I thought we were where we need as far as we could go, but we may not be. So I'll talk. I've got two here, but I know Chief Harris is on vacation, but I can get with him maybe sometime this week.
When is the next
meeting gonna
I don't know. Anybody, the next finance meeting, I mean, I guess when we schedule it, y'all have a split?
How much time do you need?
The 14th, and I'm not going to be able to be here.
Okay.
Next Thursday, you're not? That's our scheduled meeting, but, I mean,
When would you be available?
Tuesday?
Any night but that night.
So could we do it Tuesday, what, the 12?
The planning commission.
Oh, yeah, we do.
If-
Like this, 5 to 7?
7 o'clock, so,
if I could get it down to the 628, would y'all be willing to go to 12?
The 12.
I mean, or would we, I mean, what type of revenues are we looking at, I guess?
Well, I haven't really had a chance to speak, but Tom provided me with this tax history from 1977 to 2015. And believe it or not, we, in 1981, were at .87. From 81 to 88, we were 1.15 and 1.55. So we were quite higher, and then we dropped in 88 and went down to 93, and we're still at 1.0. Then we proceeded another 4 or 5 years went below $1 to 0.91. In 2001, we were at 0.72, and that was another 5 years. Then it kept going. We went back up in 2005. I don't know what happened, what we were doing in 2005. And
Police
then
and fire.
It was
a
what?
10-cent increase for public safety.
Okay, but then we went back down 2006 to another 14% to 2010. So that leaves us at 0.70. And then we went down 2011 to 0.635. So I found it very interesting that we were really higher in the past. And I'm saying all this as Tom provided me with this information. Compared to our neighbors, Cheatham County is 0.91, Dixon is 0.97. Of course, just, you can keep going down. I mean, there's,
White House is what we're comparable to.
let's see, White House is on here. I got weekly. I think you probably did a certain range. Is that how you did it? So anything over,
But really and
Um,
truly, Mayor, if I could, all those numbers are skewed because our property values are 3 times higher than any place you just named.
well, that's,
So those figures are actually irrelevant for a discussion as such, because if you made, those properties there, if you took the exact same house in Castleberry and put it in Dixon, it's gonna be as much difference as the one from here to Franklin. So
probably a
the
valid
actual
point.
figure there and what they pay and what we pay, we're paying 3 times what they're paying, even if their tax rate's higher.
right.
So that part of the discussion doesn't
But the
jive.
dollar amount is still the same dollar amount. If you have a $150,000 house and you pay that whatever percent, it's still the same. If you have a $150,000 house here and you have one in Franklin, it's still, I mean, it's still the same dollar amount that they're being taxed on.
Dollars are equal, but the land and stuff itself is not, because, well, number one, there's not any $150,000 houses in Franklin. The lot would be worth more
Might
than
be
that,
a condo, I don't know. I'm just saying, your dollars are matched. But anyway, I'm saying all this is because unfortunately, we will have to make some kind of tax increase, and we need to come up with what that amount is. But I tend to feel like Shannon is, I can't sleep at night unless we find cuts. I don't want the taxpayers to have to foot the bill for the last 4 or 5, well, actually, it started, who said that earlier? I think Donna.
You want to see it equal on both ends as well?
Well, I'm just saying that we need to, there's a compromise here. I pulled the phone records because I always thought the 80,000 was really high, and I only went back 6 months. But we, paid, let me find my piece of paper. Now we got
What
too
did you
many-
say our highest tax rate was? $1.07?
$1.55.
$1.55 in 19.
I bet $1.55,
88.
I bet it was less taxes than what we pay now, at 63.5.
It could be, I was just giving you the range. But I went back on the cell phones for 6 months, and we basically are paying anywhere from $3,000 to $5,000. The majority, well, $2,851. But in 6 months, it was $20,000, $20,164. So let's add that, but divide, because it's only 6 months. So we're potentially spending on just cell phone bills, $40,328.74. So there's a lot of areas, a lot of cities, and I've talked about this before, that do allowances, allotments. We give the employees their phone, and then we go from, because there's a lot of unknown. I noticed we had overages from anywhere from 150 to 400 on some people. Most average employee kept it in check. But I think that is unpredictable. It makes it hard to budget. And if we gave a allowance, then they can keep their phone, and then we know exactly. We don't have to worry about overages. We don't have to worry if the plan are going up on the plan. So, just by saying, and I picked what the company I used to work for gave me when I had a phone allowance, and that was $35 a month. If I took the employees, 36 employees, and times it by 35,000, that would be $12,000 dollars a month, and then you would do, or if you want to do the $25, which I think that's what my husband gets from Davidson County, is $25 stipend. That would be $900. Well, that would give us, if we're looking at the 80,000 and half of it's cell phone, that's a cut right there. It's a huge cut. So I think that we need to look at, instead of necessarily saying, okay, we got to cut somebody from every department, those are some things that we could do that could change the numbers for Tom. And it could be a steady, across-the-board budget item, and we wouldn't have to worry about the fluctuation, except if we got new employees. Now,
As I stated, I have to leave.
Okay.
Last meeting.
So with that being said, the other thing is we have been generous in giving a 2% raise every year in a financial difficult time. And I think, even though I don't like to look at the employees and say, you're not going to get your merit raise, but I think with the problems that we are having, there's no way, it doesn't matter how much we love them, we cannot give them a 2% increase. Now, it doesn't mean, and y'all, everybody knows, it's been in this process, if we come June 1st and we have money and we blew it out of the water, we can, as a board, go back and implement their 2%. But we are not taking money away from them by not giving them 2%, and we wouldn't affect their families. It just helps our budget. Now, it's a small amount, and I agree, but right now, 20,000, 30,000, it all adds up. We sat there and did 10, 25, you know, it all adds up, and that's what it's gonna have to take. And the other things is people or programs. Well, right now, you know, don't know what programs you want to cut, what services you want to cut. You cut people, you're going to cut the services when it's fire and, you know, police. We could come through and add a pat, or do like, you know, what Donna was saying, you know, a $25 a year park fee, which is something that I've never believed in and I've always fought against, but, you know, when it comes down to it, you know, what are we gonna do? But those are what we gotta decide, people or services. I think when it comes to property tax, if we raise the taxes, I say that we go for enough that covers what we need. But it's only a temporary increase, that we can let the citizens know that if we have to raise it 20 cents, then in 1 year's not enough. I mean, this is not over in 1 year. It's 2 years, maybe even 3. But say if we raise it for 2 years, I think as a board, we should agree that this will be raised for this amount of time, and at that point, we can lower it back as we get ourselves out of the trouble, or even if we don't lower it back as low as it is, it's more of a reasonable amount. So those are my suggestions as we move forward and we study and we want to try to figure ways that we can improve our situation.
I say one thing.
Yes.
Now, the board can lower or raise taxes anytime they want to. They're promising people you'll do it in the future as contract legislation. It can't be held to it. The future board can't be held to it.
Right. Well, and, you know, they can come around anytime as a board and undo anything. I'm just saying as as a commitment for, I mean, most of us, you know, will be here 2 years or at least, you know, a year and a half.
I just had to say that.
Yeah, you're right. I understand. So, but that's kind of what I'm thinking. Anybody else?
I have one more question. You've cut part-time help by 37,000, and it's been pretty consistent for 2 years, so how is that gonna happen? Line 111.
Yeah, that's the Safer Grant.
What is that?
That's the Safer Grant money. It's $69,940. That's all we're gonna get. That's all we're gonna get paid.
That's the grant for the 3 firemen?
Yes.
Oh, okay.
We talking about line 113?
She said 111.
Yeah, I know, but I mean, there's also a a little less than,
Yeah.
about $30,000 in part-time salaries on 113.
Yeah.
There is, on that one, part of the problem in this year's, if you notice, it's over. And that salaries is under. Part of that difference is that appropriate, when Sissy went from part-time to full-time, a box didn't get checked in our accounting software, and her salary kept getting credited to part-time. And also,
So do you have that in the salary line now?
for next year, yes.
It's actually 19,000, not 30. I don't know. My math wasn't very good.
I see where you looked at.
Also, Roy Russell is going from 33 hours in here as lieutenant to as going to 24 hours as park ranger, plus a substantial decrease in hourly wage. So that's a little bit of that as well.
Do we have the retirement figure yet, percentage we have to pay next year?
As far as I know, they're still at a 2-year, and so we're at 7.4% right now. And of course, that's only on the people that are qualified. that if you're a city employee, it's 6 months. If you're public safety, it's a year. So anybody that's new is in fire or police does not go on until after a 1-year anniversary.
And the contractual services?
Those should be down. Are you asking why? That's another one of those nice things we kind of walked into when that's the 911 EO emergency contract, and we had gotten behind 3 years. And so this is the last year to get caught up. It's usually $9,000 for police, $9,000 for fire, and we've been paying $18,000 each the last 2 years getting caught up. And then the police has a couple other little small contracts. Yes.
But that's not because we didn't make the payment, it's because EOC didn't bill us.
Correct.
So that people understand that we didn't skirt them.
I'm sorry. Yes. Yes, and it is hard to get a bill. I've not received a bill from the health department, and I've got to call them on that. So I'm not trying to not pay that bill as well. But
Didn't we have an overage or something on the health department that we gave back to them? So for paying or do something with?
I don't know. This is a utility something. The
You're right, they
$15,000.
requested, they had to get permission though. It was already in their account.
But it was unused.
It was unused and they had to get permission from us.
I knew there was something in there, something.
According to their own rules.
I do have a question. If that school's facilities tax money had not been there for us to draw from, I know you've said this several times, that we've never missed paying a bill. But had that money not been there to draw from, would we have not been able to pay some bills?
You'd have gone into some restricted funds, in my opinion. If there may have been you may have been taking another action. I don't know.
So I guess my point is, if that's the case, and if next year that money's not there to draw from, if we miss on this budget at all, we're not gonna be able to pay a bill. I mean, we can't, in other words, we can't miss. We've got to get this budget right, because we're not gonna have that 400 and whatever $1,000 it is to draw from.
And we run the chance, not that it's gonna happen, but we run the chance of, say, everybody keeps using the example of the auditorium, if they ever wanted us to pay. I mean, we're in an obligation to come up with that money if they wanted to build an addition or a new school. So it's just really a sitting time bomb if, waiting as long as that money's not in there. And the thing about it is, we still spent this year, even when we should have been in a free state, only had to. So, one of the things that I know that some of the citizens are concerned about, we raise your taxes, but then you keep spending, are we gonna be in the same situation? And, I want to be able to feel comfortable that we're not setting ourselves up to be in the same situation.
That's where I'm coming from with it.
I think, as I stated earlier, I think the board has been very responsible in the stabilization plan. I think if anything comes that will look favorable from the state, I think I have not had any calls from anybody. Now we have, I've gotten a couple of letters that we're dealing with the last two budgets, last year and this year, but I mean, it's nothing that's detrimental or anything. I do feel like we're at a crossroads, and it's time to move forward, in my opinion. Whether we take strides, I will get with the directors if I can get it to 628 with their blessing, because they're going to have to do it, because we'll try to do it and see what we can do. But if they say we can't do it for that, then
Well,
We'll
Tom,
see. We'll just, might have to go backwards.
well, if they can't do it for that, then we've got to ask, who do you want to let go of? Because
well, that's what I'll
basically, that's how it goes. But I'm a little worried, kind of like what Commissioner Crutcher mentioned, is, or I don't know, somebody, we got to be realistic. If you can't live off of it and they really can't function, then, I don't want them to cut so much if they really can't function. But if I can come in and look at 6 months and find a cut, they may have to really consider, what they're spending their money on. And, but I just think we're gonna have to be realistic. And, if you cut down as low as you can, then we gotta be realistic with what we're gonna ask, yes.
Just what I would like to see, you may just want to see it, and I'll let see Alan's projections in print. My mind will work with the racers very well, because it sounds great, but it's also something that I'd like to see what he's got there and working with Tom to see if it's doable, and then make a decision on, are we gonna have this money left over? And a lot of it is gonna be, I don't have any doubts that we're gonna have increased sales tax revenue. And we're just growing, it's there, it's coming in, more than what we've had the last 2, 3, 4, 5 years. But we don't wanna count it, that's fine, we shouldn't count on it, but if you take Alan's, what he's talking about right there, and I can see it, and he can put it to Tom, and if it's doable, then great. But it has to be a collaboration between the budget that he's proposing and what he can do. And I know from experience, you can't, when you're dealing with services such as fire and police department, you gotta have X amount of dollars to do services, or it's not gonna be there, the service won't be there, so. But things like the maintenance on the new patrol cars, we cut maintenance costs tremendously through that, but we've had to pay for police cars, but that part of that budget has been reduced quite a bit.
Well, and the thing about Alan's budget that I do like is it does what I'm asking.
Yeah.
We're increasing property taxes by a comparable number to a decrease in expenses, if it's doable.
And I'll vote,
Well,
not to vote on it, but to go along with the mayor there, I really don't, I went several years at the sheriff department without getting a raise, and if that's what it takes at this time around for us to start with, so be it. But we can always add it back, we've done it before, we can do it again. But if Adam's plan is workable, we won't have to.
That's the, excuse me, the only thing that I struggle with in this conversation is we go back to, is it doable? And if what we give them is $628,000, until we reach the point that a utility bill is not paid, there's not gasoline for a vehicle, then it's doable. I mean, we're asking people to meet a mark that we're not willing to set. And what I was trying to do up there was set the mark. And when Tom goes back, says the board has given us $628,000 to cover $833,000 worth of expenses. We cannot leave this room until we are at $628,000. Period. And that's what that's what we asked for. What we keep doing, and it's part of what we've done before, is that we set a number and we keep asking them, in essence, and this is I can't think of anything right now to replace it, but that need-want line is real fuzzy at times. Now, when we first started this process, it was more clear as to what was want and what was need. But they've cut, and so now it's when they look at it. For example, and I'm just going to use this. We have $12,000 in there for our 4th of July celebration. Okay? Now, that's not for the 4th of July celebration this year, I don't think. I think it's for the 4th of July, at least some of it, like we've already approved the fireworks thing for this year. Some of it is for next year's 4th of July celebration.
I don't mean to interrupt you, but. And that's another one that I struggle with, because I feel like we should show that as a net account. I think it should just zero out. I think we're gonna bring in enough booths and enough donations and enough to pay for everything.
You do have it in, you have
But,
it
you
in
know, the way
revenue.
everything's been set up in the past, revenue and expense, so, you know, it's really the same numbers. You either you show it here and show it here, or you don't show it at all. So, I mean, I could take my expense down, but I'm also taking the revenue down.
Yeah.
But in terms of that, though, and I'm just using this as an example, I'm not recommending this, because of all the things we do, the 4th of July celebration, I think, is one of the things that most folks really enjoy. But you take it, and just like Patty talked about with the telephone, you got to go through here and look at every one of these items to determine, is it doable? You know, is it doable that, no offense to my colleague here, but Larry comes to a lot of meetings. Well, if we don't call the meetings, Larry don't have to come.
Yay.
Now, he charges a reasonable amount. Probably we get a good deal for him. But the bottom line is that if we just looked at our own practices, if we have committees that only meet quarterly instead of monthly, we save utilities. Now that we've made the decision that everything will be broadcast, we save employee salary. We save support services from Larry and our engineer and other people that we have to pay. So those are all operating changes we can make. If we would go and buy, and I don't know why people think this is a problem, but if we would go to Best Buy, I bought 2 new tablets for $90 a piece. If we went to giving the 10 folks that need a tablet not to print and deliver our package, we would have an ability to throw it up on the screen always where people could see it, and we'd save a ton of paper. This week's packet is 66 pages long. Times 10 is 660 pages at 10 cents a copy. And that's for every meeting we deal with. What if all this information that Tom just gave us was sitting in front of us on a tablet?
I would have a hard time seeing it, but okay.
Well, then you get a bigger tablet.
Well, you just asked what if, I was just gonna say.
Because your tablet is the same size as your piece of paper.
I know. But I can go like this, and it's not as,
No, but you can blow it up on the tablet. But the point being that that's how you get to $628,000. You don't take the easy route, which says, well, let's just dump somebody. Because dumping people, you have lost your investment in the training of that person, you have lost the production of that person, and whether you believe it or not, you have undermined the very thing that you need when the money is tight, and that is the buy-in of the employees. You need your employees to be more dedicated to their job, to be looking for ways to do things in an economical way, and you don't get that response from human nature if they feel like they're being the brunt of what you're doing. And we've already, in terms of what Commissioner Carroll is saying in terms of that, we've already taken, in effect, half of the pay raise by going back to the anniversary date. A mistake we made as a board by not following the original proposal. So we've already taken one of that 2% back. So you're going to save another $28,000. Okay, well, what is that going to get you?
that would give them the insurance though. That's the same amount.
But we're not giving them the insurance. We're actually saving money on the insurance over what we would have to pay if we continue what we're currently doing. And what we are currently doing is the minimum standard under the law. So we couldn't cut that back any further. we would have to pay the $400,000 to Blue Cross Blue Shield to continue to do what we're doing.
You lost me with the
Yeah, I don't know
minimum
that I
standard
understand.
under the law. What do you mean by that?
Well, the Affordable Care Act sets minimum standards for health insurance.
Well, my insurance meets minimum standards, and it's far worse than that policy.
You're not a company of 50 people. There are a lot of things.
My wife is. That's what I'm saying. I don't know that, I
Well,
think you're going to
that's
show me
fine.
something to
Go ahead and read
substantiate
it. You know, but the bottom line here is, it's not a this or that. It's all part of a package that these people have invested their time and their effort in becoming our employees and doing good things and learning their jobs and being efficient and all of this other stuff. And then without us exploring every other option, then to take an easy way out, which is what I think it is, and just say, okay, we're gonna have less people. I'm all for, not filling vacancies, really not filling vacancies. That we don't fill them. That saves money. You add that to what I perceive will be an attrition rate during the year of at least 1 or 2 people. That's what I've experienced since the time I've been up here. That's gonna be a pretty sizable amount of money. So you do all of that, but you don't make, I just, when I presented those numbers, and I looked through here, and I underlined all the things that I believe could be done with less. Now, does that mean they will do exactly what they're currently doing? No. But I'll give you an example, and you know, the Parks Department may shoot me, where's Keith? But they buy new lawnmower blades. And this is an example that they gave me. If we gave them X amount of money, which only bought 2 sets of lawnmower blades rather than the 3 sets of lawnmower blades, they're going to have to learn to make the 2 sets go further. Now, the lawnmower people will tell you that those blades are supposed to be replaced every so many hours worth of cutting, and I don't know what it is. But those are the kinds of things that our employees know that we don't know. But if we only have $5,000 for lawnmower blades instead of $7,000 last year, give them that problem to solve and see if they can solve it. This is where we're starting. Now, I think it's an Achilles heel if we start coming in and making adjustments all of the time to add to the pot. I don't, even if we start to show surplus, I think we just keep building a surplus. But there will be something, as we sit here today, that none of us thought about. That we are going to have to change this and going to have to make an adjustment on the fly. I don't know what it is, you don't know what it is, we don't. But until we're faced with it, then in my opinion, to put them under the bind, it is just not right. I am a firm believer that if we give them $628,000 without the, is that doable? You have $628,000, come back with it. And I agree with Patty. We have saved their insurance, we have given them a raise, we have done many things that are positive for them as employees. So to ask them to look at how much copy paper they spend, or how much resources that they use to do certain things, or, you know, part-time employees. Maybe our part-time employees, we don't need as many part-time employees, or we don't need as many hours per part-time employees.
My fear is if we give them $628,000, we're still going to find that we spend $828,000 next year.
How can you do that? They can't spend it unless we appropriate it.
We'll amend the budget. We'll do a budget amendment.
Not if.
Historically, we've done that.
Not if we follow the rules that we agreed to, which is you can't spend it until the budget amendment comes to us, which we've already adopted and been operating under. And you can't have, the way we've set, the other rule we've agreed to is that everything's going to be discussed in the board before the budget amendment is written. So
We excluded budget amendments from that.
I don't remember us excluding anything, but maybe we did. I don't know.
Well, we gotta work on that anyway.
But the bottom line is that we have put in all of the safeguards that we can do. You know, and if the buck stops up there, if we start allowing allowances, then we'll have a problem. If somebody comes to us and says, the park truck broke down, we need $3,000 to go pick up garbage at Evergreen. We don't have any way to do that. Well, no, you'll have to find somebody else's truck. You might have to borrow that from the street department. The street department might have to do that.
But aren't we really placing the departments in a bad spot? I mean, by doing that, by limiting them as much as we are, for them to not be able to potentially do the job that, I mean, it sounds like we're cutting to a point where we're no longer functional.
I don't think so. I think we're continuing to cut out those things that to challenge them with the same situation that we're facing. And I think that we will know it by response from the public, and we will know it by our contacts within that, and we will know it by the reports that Tom gives us, whether or not we have set up an unmanageable situation. But what we do by dropping is it doable, we give them a finite number to shoot for. And I believe that if I'm given $1,000 on tools, that if I need a tool, if I have $1,500 and I need the tool, I'll run by it. If I have only $1,000, I might try to fix it, or I might do this. And that's just human nature. I'm not saying that we have bad employees or bad managers. I think they're already geared that way by the amount of money they've turned in. I think to get progress, which is what we really want, and I would like to see us have a budget that we can all align with. We're not going to all agree with every specific aspect. There's too many things to disagree on. But wouldn't it be nice if we had one that we all aligned on, that we didn't have a split vote, that we basically decided that this was the entire philosophy of operating, the board through every employee? And the only way to do that is to give them a number and say, this is all we have. It's not that we're trying to short you, it's all we got. What you need?
I would love for us
I'm gonna
to,
run out. Y'all keep meeting. Tony, take over for a minute. I gotta go to the restroom.
I would love for us to align on it, but one of the things, and I read the annual budget memo from the comptroller today, and one of the things that it tasks municipalities and its officials to do is to adopt a budget that's realistic. And that's one of the sentences here. Adopted as realistic and in compliance with all federal, state, or local laws. And it sounds like that we're kind of getting out of what may be realistic. And maybe Tom will come back after he meets with department heads and I'm wrong. But it just sounds like that we're getting to that point where we're not going to be functional as a city, or the departments are not going to be functional because they just don't have the money to operate with. And it still appears that we're kind of sticking Band-Aids on things to.
So in essence, what you're leaving them with in terms of decision, and please correct me if I'm misunderstanding you, is that the only way to have more revenue, if you're going to follow the mayor's principle of we will only start with what we get this year. So there is no more revenue to get unless you raise property taxes. Okay? So you are saying you will raise property taxes. If he comes back and says $833,000, then you are saying that in order to support that, you have to do one of two things. You either have to, because you're not willing to tell him that doesn't work, because, out of fear that it might not be doable. And I don't mean that facetiously. I just can't think of a better word for it. What you're saying is, and we're only going to raise property taxes by X amount. There is a shortfall in there, and you're leaving the only option is to let people go. So, in bottom line, what you're saying, and I want you to correct me if I'm wrong, is it is your preference to let people go rather than cut a particular job spending category that is durable goods.
No, that's not my preference.
Okay.
My preference is that we wouldn't be in this situation having to deal with it at all. But the reality of it is we're here and somebody's going to have to make some tough management decisions. And there's things that continue to happen that are perplexing to me. I mean, like in the middle of this, people are getting promotions. I can't wrap my mind around that. And it may be a small increase in salary, but nonetheless, we're supposedly in a hiring freeze, but yet we're giving promotions from within. It just doesn't make sense to me, some of the management decisions. It just doesn't make sense. I don't know.
Well,
But no, that's not my preference.
then I think what I propose deals with that issue. It puts the cut on the managers of this organization to find a way to live with 628,000 or whatever it is. And it doesn't, and that may reinforce your principles. What you don't particularly like is not your real jurisdiction.
But it needs to be, though.
Well, no, it doesn't. It's set forth by the charter.
During budget time,
We
we
can-
need to have consideration on those line items of how many salaries and how many positions we give. We can't tell them who to hire. We can't.
Or to
I mean,
promote.
Or who to promote.
Or who to fire.
But during a budget time, and we're discussing numbers, it is our concern. This is one of our number one jobs, is balancing the budget, and we're not successful. And so if it's because we haven't paid enough attention to what the city manager prior, not you, was doing, then maybe those are discussions we need to have right now. Donna's been wanting to say something for a while.
Number
Sorry.
one, we gave them a finite number, and now we've raised that 300,000. That's just my comments about yours. In my opinion, the very least that we can have them do is reduce by 250,000, because next year they're going to need 250,000 more than they've got this year for the debt service. We get the property tax increase, and it's strictly for reserves. There's no way, I mean, you need to write it into the amendment if that's possible.
You earmark it in your budget.
It's strictly for reserves. And how they get the 250,000, it doesn't matter to me. The other thing is, last year, we used the school facilities tax money to float us through the first 4 months. We do not have that this year. And we need to address how we're going to cover that 400,000 shortage of cash that we're going to have.
I asked that question today with Tom. He did jump in. He thought that with the restructure and not having the debt, we will have certain amount of revenues that
That
will.
wasn't part of what happened in the first 4 months last year. We didn't have any payments.
Oh. Okay.
We have $11,000 in November.
Right, our debt service is coming due here in May, here shortly.
Our what?
This building, and that's what, and plus the extra payroll, and we've got, anyway, there's 2 debt service things coming due. But if we don't have any debt service coming, we're maintaining our bills, but I would like to, I'll sit down with you. I'm gonna do my own projection as well, but I think we need to be ready to move on to TAN. As I stated earlier in this meeting, I feel like we were saying things 2 and 3 times, but yes, that's a legitimate tool that's here that we can use, and there's nothing, I mean, that's what it's here for. I also talked to John about it, and we can either use a local attorney or local whoever we go with. We used First Bank with a GAN, but I mean, he said their firm could write it up as well.
I agree with you. I think that the money should be borrowed, and we should, so that cash flow is the same. I mean, I also, there are many things that you can do that are operational and issues. You could go to employees being paid twice a month And that way salary is always the same.
Please don't do that.
You know, but, I mean, there's a cost involved in all of that too when you make changes. So, but to getting the money that does the property tax thing, I think is a good idea. When I found out that was available, I've always thought that was a pretty good idea. Because it has to be paid back when the money comes in. So, and we don't borrow all of it, we borrow, what, 60%? Which is what you borrow, and then you have an even cash flow, and you don't have that problem, so that you don't have to, the $30,000 we're putting up every month into the replenish tax, you don't have to borrow against that again to make your payroll. Once you put it up, it's up. So that in 2 years, you're basically got the big fund, which is the school tax, paid back, and the money you're putting up is just money to put up into your unreserved back fund, general fund. So,
When is the TAM? You have to pay it by June 30th of the next year?
Yes, fiscal year.
so I just think that, you know, I just don't like saying if it's doable. I'd like for them to come back with $628,000, and once they come back with $628,000, then we'll look at it, and they'll have to tell us how they got there. I mean, we cut X service, we did this, we did that. That's how we got to $628,000. And then we can decide, can we live with what service they cut? But at $628,000, you're still needing a property tax increase of 12 cents. But that is the same amount as what you are cutting expenses, which is what I understood was one of your priorities.
But then that means that when we get a property tax, we can't say that it's just going to reserves. We're actually spending part of it.
What different, we already have legislation on the books that says we've got to put $360,000 into reserves. So, I mean, you're just repeating it if you put it into the thing.
Well, it needs to go back to
Yeah,
the
but
school
we're actually
facility
adding
tax.
it into the expense line here. If we're putting it in the reserves, it actually is.
Well, but then you don't need the expense. Because your stabilization plan says we're going to fix that reserve problem at the rate of $360,000 per year. So if
And that takes all of that money that we just, 23.5 cents gives us 400,000. That takes all of that money. We can't give him 12 cents to add to his expense.
Well, if you take your property tax of 12 cents and you designate that into the 360,000, then he's only going to have an expense of the replenish tax of 160,000. That's how he picks up his $200,000. If you do it that way, it's 6 of one, half dozen of the other. If you leave it the way it is and just raise it by 12 cents, then it comes into general revenue property tax. You've already, by legislative law, we have set ourselves up to pay $360,000. The net amount going into the school facilities tax is essentially the same. It's exactly the same, not even essentially the same. It's exactly the same.
No, when you figured up the expenses, it took you 12.5 cents to make it up. So you're spending 12.5 cents instead of putting in 360,000 into the reserve.
That was the very first thing I took off the top, was $360,000.
I know, and then you came on down and you said what we needed to do the expenses. So you added back in 12.5 cents.
Correct.
So you essentially lowered the $360,000.
No. No, at the end of the year, there'll be $360,000 in the school facilities tax fund. The question is, if you designate the property tax to go directly to that fund, then what you've done is you have the replenish tax, is what I call it, the replenish amount.
You've increased the revenue he's gonna have, okay. I got you.
It drops it's not 360 anymore, it becomes 160. Which increases the amount of revenue you have. So it's whether you want to change 2 pieces of legislation or 1 piece of legislation. Because you'll
Well,
you'll have to change the.
My personal opinion is, I want it in the ordinance that the 360 goes to reserves. That way, there won't be any question about whether it's in this number and we've subtracted it out here and added it back there and, but I'm not voting on it, y'all are. So.
The only thing else that I just have to say was that basically this year, even if everything goes perfect and there's not additional ice storms and no disasters, or everything just goes perfect like it's laid out on the table, we're still in trouble for a lot longer. If we, and we just need to really consider that this, we run a liability as a city operating any account in the negative. And it is about being responsible, and those accounts need to be where they need to be, what our budget says, and we need to balance a budget from now on.
Is that not addressed in your recovery plan?
It, but
Three-year plan?
it is,
That-
but
no,
we're
that
not
was
paying back the
starting from
facility.
zero. We're not starting from zero. We're starting from negative $500,000.
No, it accounts for the negative.
There's
No,
no way we
It would
didn't
eat
know.
up. The first year and a half, we're not going to be putting anything into reserves. We're going to be paying back our whole.
Which is putting it into the reserve, lowering the amount
And that's more
of
than,
money.
No, it's just getting us back to zero. We should be starting, if we were in good shape, we would be starting at zero. And three years would put us at $1 million.
No, you have to,
Instead, we're starting at a negative 500.
okay. So the first three, at the end of the first year, the first three.
At the end of the 3 years, we're going to have
wait a minute.
400,000.
At the end of the first year, you're not at minus 500 anymore, you're minus 140.
Right.
At the end of the second year, you're not at minus 140, you're at a positive 220.
Yes.
At the end of the third year, you're at a positive 580.
But if we started at zero, we would be at $1 million at the end of 3 years.
Well, yeah, but that's not reality. That's where we are is where we are. So what the plan we put into place was that we would be on 3 years, and that was the goal, was to have $700,000 in the bank. Now, that I just said does not count any growth. So if we have growth, great.
We
Then-
cannot spend it.
We cannot spend it, but, well, unless there's an emergency circumstance, but that's going to require 2/3 of the vote. Remember, that's the provision we put in there. It's going to require 4 people up here. It's not a normal piece of legislation. So from where it stands, we have done and built a model, if we follow it, that 3 years, 3 budget cycles from now, of which 2 of those budget cycles, the board as it's constituted will for sure be here. So only if the third year the board changed and they changed it. If we follow what we've set in place, we don't have to do anything else. We will get to the result we want. So I just, that's not a little amount of $360,000 off the revenue off the top. That's a pretty substantial assessment, given that we're not factoring any growth, we're not factoring anything. So, you know, I heard the mayor say that we might want to limit the tax increase to correspond with the stabilization plan. I think that's Merritt's talking about. What does it need to be in 3 years after the stabilization plan? But I'm thinking that our real problem is what I tried to demonstrate up there, and that is, we keep thinking there's another option other than just setting the amount of money. And as a commissioner, I would rather set the amount of money and run out of copy machine paper than lose my investment in an employee. And that's just my choice. Now, somebody else may see it differently, but that's where I am with it.
Only thing I want to say is we cannot act like the school facility tax is ours. So by saying that we have it in our reserves and building up our reserves, that's not ours. Until that amount is paid back, we didn't meet our stabilization plan
Right.
because we have no reserves. That's their money and we have to get it back. And that's all there is to it. So to sit here and say that we're going to be any better off, or that 300, the difference each year that we bring in is going to in some way fix it all, is not. Until that money's back,
We haven't started
we
yet.
haven't started yet.
Well, it is designated money, but it is part of the reserve money.
It's on a budget, like a line item on a budget, but it's not our money.
We're paying back a loan that we didn't ask anybody if we could have.
And we can't say that we're any better off than we are right now or this coming year, even with this budget.
Well, we'll just have to agree to disagree on that. I think if you reduce your outstanding liability from 360,000 or whatever it currently is to 140,000, then I think you have made progress. You may still have the liability, but I think you've made progress.
Well, and I didn't say you didn't make progress, but the statement and the reality is you can't say just because you have a line item now to rebuild back the reserves that we have reserves, because that needs to go
I
back.
didn't say that. I said it's a
Well-
3-year plan on the stabilization plan.
Well, we won't have any reserves built up until that school facility tax is paid off.
That's correct.
Okay.
That is
long as we're
money,
clear.
that is money that we can spend on anything other than an emergency.
But it's not designed for money for us to be able to spend on anything we want. The school facility, is that what you said?
Well, we've pretty much just gone to the county and asked, could we spend it, and they've pretty much said, okay. So, I mean, yes, we would have to take that step, but my guess is that,
Do we have that in writing somewhere?
The
well,
only thing that
That they
they've
said we
given
could
us,
spend it?
no, the only thing that they've given us permission per se that we went in front of the Board of Commissioners was the library. The other, now Crystal did several years ago call and inquire how the money was to be used. And her report back to the Board of Commissioners is we could, when we were looking for wanting to give to the schools, that we could use that. Now, if it's in writing, I don't know, and
It's in writing in the state statute. The state statute says that you have a little, it doesn't say you have a little more flexibility, but the county don't have any flexibility at all. They can only spend it on school projects. But the cities have a little more flexibility. They can spend it, they have to make a determination that that is a public project. Now, obviously, the library was a public project, and we chose to go to them because it's a nice thing to have everybody on the same page. But giving money to the schools for their program, for computers or whatever, you don't have to ask the county. You make a determination that that's a public project, and you spend it. You can make them, that it's a public project to pave the parking lot at the school if you wanted to. That's a public project. Now, the county don't have that flexibility.
Larry, the money she's talking about is a contract, it's contractual money with the county,
It's statutory money with the county.
but we have a
It's a
contract
contract that
with the
says
county
you
that
should
says how
put
we'll
it in
use
an
it.
investment account and
Yes.
you can spend the investment interest off of it.
Right, the statute says that too. But if you determine it's a public project, you can spend the principal. Now, you've got to be careful about what you determine as a public project, because the reason I was to give the counties permission, because then you don't run the risk of them saying, you said it's a public project, we say it's not a public project. So if you get their permission and both of them determine it's a public project, the comptroller doesn't really care. If the county and the city both say it's a public project, obviously the school's a public project. Obviously giving money to the schools to buy books or buy computers or what is a public project. I don't think anybody's gonna argue with you on that. But I don't ever recall anybody bringing this before the board when the money was spent for something else. That was never approved by anybody, to my knowledge.
We haven't actually spent it. It still resides in there as if it's there.
Okay,
We've actually spent the cash.
then you have.
We took the cash and paid salaries with it.
So in your,
You said the money's still there.
No,
Oh.
in accounting, it's still there.
Oh, okay.
it's not there.
It's not there.
So
We've
in your
spent it.
opinion, is that an appropriate use?
No, sir.
There you go.
My opinion is that as long as it's a public project, you know, if this board makes a formal decision like they did on, we're gonna give X number amount of dollars to the schools to do this for the students, then that is a public project, and I don't think you got a problem with that. But I don't recall anybody ever coming in and saying, we're gonna, maybe I'm wrong, but I don't recall anybody ever bringing it to the board and say, we're gonna pay salaries out of the school fund.
No, we've
I
just
know,
been left to have to do
I don't think I would
that.
have approved it.
Well, I don't know about salaries, but whatever.
Yeah, or whatever it was. The only projects that I recall coming before the board, just to use the school fund money was the one to the library, and that was in an interlocal agreement with the county. And I was the one that suggested you get their approval, because I don't think you had to, but they're not likely gonna raise a question that they said, yes, we agree with you. That, the $92,000, and the others was the several times that you have actually given X number of dollars to the schools, and you usually, there was a stated purpose what they were gonna use them for, to buy computers, to do this, to do that. And those are definitely public projects, and I don't think you have a problem with those.
But what we actually did was, we appropriated to spend X number of dollars, and we spent those X number of dollars, but we didn't have them. Because the school facilities funds resides in the same checking account, we used those funds.
That's commingling the funds, that's always dangerous, and I applaud the fact that it's split up, but I don't recall anybody ever bringing that to the board. I know I was never asked, can we do that to, not that, my opinion would have been no, could I keep from happening?
Well, it actually only started happening last year, when we wound up a negative $168,000 at the end of the year, is when it happened. And then we've just continued on doing the same thing this year.
No, I don't have any, you know, I don't disagree, but that's, to me, would not be a public purpose, that's my opinion.
Okay, if anybody else has any comments tonight?
I've got one.
Okay.
Mr. Michelle mentioned a minute ago, the thing with it's not anything with the budget, but like all the paper, sending out the agendas, et cetera, et cetera. Miss Brandy has emailed me mine for years, and it works beautifully, because there's something that I need to print, I print it, and it's on my dollar. But if there's something, I look through it, and if I don't think I need to print that, I don't. But it worked beautifully for me, because I just sit there and flip through it.
Okay, anybody else? Mr. Hall?
Thank you, Mayor. We're already addressing the Windstream phone issue. We're looking into seeing what we can do about changing that system out. Promotions will be stopped. Hiring freeze was on because I didn't hire Holsinger position back. I didn't hire Dave's position back. Took 5 months to replace Lavorne. The fire chief last year his whole salary was not in the budget, and we are one police officer short and one fireman short. So those things, and I have one question about the tan. This may be a question for Larry. If we do go through and get a tan, is it possible to pay for a special census, the expenses out of that?
I'd have to research that, because you're talking about tax anticipation note.
Yes, sir.
And let me research that, and then I can give you an answer and give you the basis for that answer.
Okay.
Because That would be something that would be increasing your revenue, I assume, if you do a special census, and if the population's increased, it's gonna increase the funds flowing to the city from the state. I will check that and I'll give you an answer Thursday night, because I haven't been requested to look at it. I wasn't gonna give you, just my reaction to it. I'll do that research. And I'll tell you the answer Thursday, and the board can hear it also.
Mr. Hall, as far as selling property, is there, what did you find out as far as, what we can do?
We can sell the property, but we cannot use the funds until we receive them, as a part of the budget. We can't post it in the budget that we're going to sell the property. Several years ago, we were faced with a 37-cent tax increase when I was on the board. The current city manager possibly was legal to do it at that time, but he proposed to balance a budget with the sale of the past city hall and the industrial park property. So we can't do that any longer. So we can't put it out for sale and say we can balance a budget with, or help balance a budget with that. So we just, the only thing we can do is go ahead and advertise it for sale and put it out for bid.
Okay, because we balance in the budget, but we can pay back the school facility tax with it.
Yes, ma'am.
So we could sell the property and,
Designated for,
both Deer Ridge and Dice Lampley. It's not going to be a whole lot, but at least it will get the money back in, and maybe look at other property that we potentially have. I know that we use the property on 96, but there's some property over here near City Hall also that we might want to consider. If you can look at that, if we could come up with some money, it will put us in a different direction.
Didn't we determine that the Dice Lampley has to go back into the park fund?
I don't know, that's something we need to look at, up. That'll be a Larry question.
Is it part of?
It's not in the trust, but it was originally a gift from Dr. Bowie with, so is Deer Ridge, they said they bought.
Deer Ridge, they bought
Whoever
that.
they bought, but
Sure
it,
when they bought it.
yeah.
It's part of the will stipulation, I think we said.
The will stipulation, I can recall off the top of my head, says that.
It's one of the covenants in the deed.
But I don't know if it includes that or not, if it was part of the original.
No, it
part,
wasn't the
does.
will, it was when she gave the
Sure.
land.
I'll have to look at the.
Okay, we'll have to look.
I'll look at the deed, look at the will, because I know park property per se, I know for a fact that has to go back into the park fund.
Okay.
But if it's not, park property, then I'd have to look at the will, look at the deed, and see how they're reconciled. Was it all deeded at the same time? I don't know.
Yeah, that would be something,
Just
She
have to
gave
research
some
it.
land like 1 year, and then the next year you got stuff in the will, but I'm not sure how.
I'd have to read the will and read the deed and see if there's any reference to what's considered the park and what's not considered the park. But at the worst, it'd go in the park fund, which is something would be used for that, but, it might not be as high a priority to sell as some of the others, because I know the property on Deer Ridge was bought from a private individual.
so if we could take a look at that, stuff, for that. Yeah, it's never the way I wanted to do it, but I think as soon as we could get that money paid back, we could breathe, a little bit easier for this next budget.
I think the problem came down with anything that's contingent money. You don't know how much to actually include in the budget, and you don't know actually if it's gonna be sold.
Right.
Now, you can buy, you can go out and buy property for a public purpose, and you can condemn that, take, but you can't make somebody buy the property, so it could sit there for a year.
Oh,
6
yeah.
months,
Yeah, I mean, it may not be
And
a
then
quick
at the end
fix.
of the budget year, what you'd end up is with a big hole, just like you'd have now.
We'll take all the unanticipated additions we can.
Okay, if that's all, I'm sorry to take up the park board's time, but thank you for time. The next meeting, I think, Tom, were you gonna see if you could make it Tuesday, or do you want to go ahead and call it?
We can go ahead and call it.
Okay, if we're gonna do it in front of the planning commission, which we won't be able to run over, into that, but, huh?
5 to 7.
Okay, 5 to 7,
They want to swap with us?
huh?
They might want to swap with us?
Well, it's probably got people that's announced.
Okay, okay.
We probably
Workshop
can,
back here.
we can probably do the workshop in another room possibly. And, but we can handle that in the conference room in there.
Some of the same people won't be in those meetings.
Yeah, what about next Thursday? You said we had something,
Donna can't make it.
oh. Okay. Donna. I don't know, I say, I mean, how far do we want to go with this?
I wouldn't
mean,
go any later. I mean, sometime next week.
Well, we'll just do the, stick with Tuesday with the workshop.
What time's the workshop?
Have we already advertised? the
We can always cancel the workshop.
Yeah, that's what I was gonna say. If we
I'll get
haven't-
with Frank tomorrow and we'll cancel the workshop.
And reschedule
Yeah.
it. Okay. Is that
When are we gonna do it?
5 o'clock on Tuesday? I'm gonna have to look, yeah. Yes. Okay, so with that being said, nothing else to add? You wanna adjourn, have a motion to adjourn? Okay. All in favor? Aye. Okay, meeting's adjourned.